Welcome to the monthly market and economic update. My name is Tom Drexler, financial advisor with Alliance Financial. In this video, we'll discuss the key events from July and, more importantly, what they mean for long-term investors. July brought a number of headlines that moved markets on a day-to-day basis. These range from new concerns around AI investments to rising Treasury yields to renewed tensions in the Middle East. While these developments created volatility, markets largely stabilized by month end. The big picture is that despite a challenging month, year-to-date gains remain healthy, and the broad market is actually not far from its all-time high. Over the next few minutes, we'll walk through the key themes from July and put them in perspective. First, let's talk about AI, which continues to be one of the biggest themes driving markets. During this earnings season, investors have focused heavily on the massive capital spending by large technology companies on data centers and AI infrastructure. The question on everyone's mind is whether these enormous investments will eventually translate into profits. This uncertainty drove some sharp moves in tech stocks and semiconductor companies during the month. Adding to the mix, a Chinese company called Moonshot AI released a new AI model called Kimi K3, which reportedly competes with the most advanced models available today. This raises further questions about which companies and countries will lead the next phase of AI development. However, as this chart shows, the market is much broader than just technology. Sectors like energy and industrials have also performed well this year. For investors, this is a good reminder of why staying balanced across sectors matters, rather than concentrating in any single theme. Next, renewed conflict in the Middle East briefly pushed oil prices above $100 per barrel during July. U.S. airstrikes on Iranian military sites led to slower traffic through the Strait of Hormuz, one of the most critical shipping lanes for global oil. At the same time, a militant group in Yemen struck Saudi Arabian oil tankers in the Red Sea. These developments sent Brent crude surging before it settled back to around $90 per barrel by month end. Higher energy prices matter for the broader economy because they raise fuel costs for households and businesses. Gasoline prices were hovering around $4.10 per gallon nationally, which could keep headline inflation somewhat elevated in the months ahead. Finally, the Federal Reserve held rates steady at its July meeting, keeping the federal funds rate in a range of 3.5 to 3.75%. But it wasn't a straightforward decision. Three Fed officials dissented, meaning they preferred a rate increase. The immediate market reaction was a jump in bond yields, with Treasury rates climbing to their highest levels in recent years. For investors, this environment of Fed uncertainty will likely mean more volatility in the bond market. At the same time, higher yields also represent a real opportunity for portfolio diversification. Adding to this backdrop, new tariffs were implemented in July under different trade rules after previous tariff measures expired. Many countries now face rates ranging from 10% to 12.5%, with certain goods facing even higher rates. The full economic effects will take time to materialize, but it's worth noting that many of the worst-case fears around tariffs have not played out. The economy has continued to grow. The stock market has reached many new highs over the past year. The bottom line from July is that balance matters. A portfolio positioned across different asset classes is better equipped to navigate months like this one and to take advantage of the opportunities that market challenges can create. We hope you found this monthly update helpful. If you would like to discuss any of these topics or how current market conditions relate to your portfolio, please don't hesitate to reach out. We look forward to speaking with you.